Okay, while we sort that, I will just speak. So please be aware that this webinar is being recorded, and for sound quality, you are muted. But if you wish to ask any questions, you can use the chat box. We will address your questions during the Q&A section and at the end of this dialogue. And during this time, you will also have the chance to raise your hand and unmute to ask your questions. So now, before starting the session, I would like to give a warm welcome to Connor Donaldson, the Head of Implementation of the IAIS, our partner in this dialogues, for some welcoming remarks. And Connor, please, the floor is yours.
Perfect. Can I just check if you can hear me okay?
I can hear you, yes.
Okay.
And we can see you as well.
Perfect. Thank you so much. Yeah, it's a pleasure to be able to join you this morning, this afternoon, this evening, depending on where you're dialing in from. Yes, we're a big supporter of these dialogues. They're a very effective platform for being able to come together as supervisors and other relevant stakeholders to discuss topics of interest, challenges, and opportunities for how we can work collectively towards increasing access to insurance and building more inclusive insurance markets. This topic in particular is very relevant to the IAIS and really is touching on one of the key strategic themes coming out of our 2025 to 29 strategic plan, which is really focused in on supporting insurance to serve its societal purpose of building resilience. But within that, or embedded within that theme, is really narrowing protection gaps and creating more inclusive insurance markets. This theme is especially relevant for emerging markets and developing economies, not only because of the exposure many emerging markets and developing economies face to extreme weather events, but also because of the important role that insurance and insurance supervisors can play in ensuring vulnerable populations have access to the risk management tools that they need. From 2013 to 23, we saw global NatCat losses increase considerably. I think the latest data that we've seen has put figures over 200 billion per year, with uninsured portions far outpacing those losses covered by insurance. This is particularly worrisome for emerging markets and developing economies, where the impacts are often felt much more severely and the capacity to recover more limited. So addressing protection gaps, we recognize as a broad societal challenge that requires a coordinated and multi-stakeholder approach. In 2023, the IAIS issued a call to action for supervisors to work within their jurisdictions to support efforts to narrow protection gaps. In this paper, we outlined a series of actions where insurance supervisors can help improve affordability, availability, and uptake of catastrophe insurance. And this includes creating a regulatory environment that can actively enable innovative solutions, such as parametric insurance. To support this, the IAIS, working collaboratively with our partner, the Financial Stability Institute, developed a joint report titled FSI Insights, Uncertain Waters, Can Parametric Insurance Help Bridge NatCat Protection Gaps? Unlike traditional indemnity products, which pay out based on assessed losses, parametric insurance pays a pre-agreed amount when a specific event reaches a predefined intensity trigger measured by an objective parameter or index. Parametric insurance offers three key advantages: speed, with payouts issued in days, not weeks or months; simplicity, based on objective data and not complex claims assessments; and scalability, suitable for widespread risks and particularly relevant for underserved segments where access to insurance is limited. As the relevance of parametric insurance grows, supervisory authorities are beginning to address these uncertainties to support adoption. This has led to a variety of regulatory approaches and highlighted a number of specific challenges. In terms of the regulatory approaches and challenges, we can really group these into 4 categories. 1, application of existing insurance law principles, the development of specific legal frameworks for the nuances and specificities of parametric insurance, differing legal opinions, and how to deal with exceptions and pilot initiatives. One of the most significant concerns, shared by both sides, is low levels of risk literacy and financial literacy. Over 80% of respondents flagged this as a major hurdle in the survey we did to support the paper. Consumers often struggle to understand how parametric policies work, while insurers face challenges in communicating these products clearly. From the industry side, the top concern is pricing and affordability. Designing cost-effective solutions, especially in low-income or informal markets, remains a critical obstacle. Supervisors placed more emphasis on data-related issues, particularly the alignment of indices and triggers with actual losses. These are vital to ensuring fairness, reducing basis risk, and maintaining trust. Respondents to the survey we conducted also put forward a broad set of recommendations to enhance the adoption of parametric insurance. These recommendations closely align with the 5 areas of action that were outlined in the IAIS's paper, our call to action. Starting with data and index design, supervisors are encouraged to ensure high-quality data and verification mechanisms are in place, to develop clear guidelines for index selection, and promote transparency and disclosure around data sources. In terms of financial literacy and consumer awareness, supervisors were encouraged to support educational workshops and promote plain language disclosures. They were also encouraged to help consumers understand basis risk by using as-if scenarios, ensuring policyholders know what triggers a payout and what their coverage entails. To support affordability and incentivize risk reduction, supervisors were encouraged to promote the use of advanced modeling and backtesting techniques, engage with consumers to refine pricing and coverage design, and monitor the alignment between index parameters and actual losses. Creating an enabling regulatory environment is also key. This includes developing regulatory frameworks and oversight mechanisms for parametric products, setting data quality standards, and refining trigger definitions and payout structures to ensure products are both fair and effective. Finally, in the domain of stakeholder collaboration, supervisors are particularly well placed to act as coordinators, working with other relevant stakeholders such as meteorological agencies, reinsurers, and other partners to establish standardized, localized, and relevant data methodologies. Looking ahead, the IAIS will continue to support its members in addressing NatCat protection gaps, particularly in the context of climate-related. The IAIS's ongoing work includes reviewing our 2012 application paper on inclusive insurance, continuing the very robust and effective partnership we've had with the Access to Insurance Initiative, engaging with other relevant stakeholders such as the Global Shield Against Climate Risk, and other partners such as the OECD and the Insurance Development Forum. We also are working collaboratively with partners to strengthen implementation of supervisory frameworks that support both innovation and resilience. In closing, I just want to say thank you again for the opportunity to share the IAIS's perspective. I wish you a very effective and robust dialogue today, and thank you very much. Laura, I turn it back over to you.
Thank you so much, Connor, for your welcome remarks, and thanks to the IAIS for the ongoing work on this topic. In interest of time, I will now move to the welcome remarks of Matthias Range, our Executive Director at the A2ii. Please go ahead.
Thank you, Laura. Yeah, I will try to keep it as short as possible, but good morning and again, also a good afternoon and good evening to all of you joining us from around the globe. And on behalf of the Access to Insurance Initiative, it is a pleasure to welcome you all to today's webinar on index insurance regulation, a topic of growing importance in the context of inclusive insurance and climate resilience. As the implementation partner of the International Association of Insurance Supervisors, the IAIS, A2ii's mission is to build the capacity and understanding of insurance supervisors to promote inclusive and responsible insurance markets and thereby reducing the vulnerability of those markets. Index insurance, our topic today, when properly designed and regulated, can play a vital role in protecting people against climate risk, but also on other systematic risk, especially in underserved and vulnerable communities. And we have been innovating a lot over the last 10 to 15 years, had an amazing learning curve, and are now at a complete new stage of products which are available to the market. But as Connor pointed out, and which Asma and our panelists will discuss now, obstacles remain and other potentials are not being touched yet. And with this, we are really thrilled to have such a distinguished panel today with us. And I would like to extend my sincere thanks to Andrea Camargo, to Pujan Adekari, to Heiko Kasama, and to Gloria Vumetzo for bringing your knowledge and the ground perspectives from your different angles to the discussion. At A2ii, we believe that collaboration and knowledge sharing, like today's event, are essential to building more inclusive climate resilient insurance systems. And I look forward to that rich conversation ahead and seeing how this work continues to evolve and to strengthen over time. Thank you once again, but let's get started.
Thank you very much, Matthias, for your words. Now, before we jump into the panel discussion, my colleague Asma Jabri has prepared some slides, a very short presentation to discuss some key notions of index insurance. So, Asma, the floor is yours. We can't hear you.
Thank you, Laura. Good morning, everyone. I'm pleased to participate to this event. In interest of time, I will start by introducing some key elements. Okay. Do you see the presentation? It's okay?
Yes, we can see it.
Okay, thank you. Yeah, there are three main risk management strategies to address weather-related risk: indemnity-based insurance, weather derivatives, index-based insurance, and in the next slide, I will present the main characteristic of each of these concepts. Okay. The indemnity-based insurance is a contract based on physical asset values, deductibles, sublimits, and policy terms and conditions. How does it work? After an adverse event, experts evaluate the damage and loss, and the payout are aligned with this assessment. This contract compensates policyholders based on their actual verified losses, up to policy limits, of course. In the most traditional, the limitations are the following. In most traditional insurance contracts, the insurer is confronted with the problem of adverse selection and moral hazards. And the claims compensation follows a long and costly process for the payouts depending on the complexity of loss. Used by organizations or individuals, weather derivative is a part of risk management strategies to minimize risk associated with adverse or unexpected weather conditions. This contract is a financial contract between two parties that stipulates how payment will be exchanged between the parties, and it depends on certain meteorological conditions during the contract period. It works as following. The buyer makes an upfront payment to the seller, and thus the seller agrees to bear the risk of disaster in exchange for the premium. In fact, this contract is similar to an insurance contract. And the buyers receive a payout if the index crosses a specified threshold before the end of the contract period. The advantages of this type of contract is the fact that the index is designed to reflect losses or liquidity needs caused by an adverse climate event, and the method of claims payment is transparent and fast. The contract in the opposite, the contract value are volatile depending on market dynamics, and this contract introduce a basis risk. This is the inadequacy between the loss and the coverage. Index-based insurance, it's a product designed to offer protection against losses caused by extreme or catastrophic climate-related events. It's not traded on financial markets. Index-based insurance has two key components, a trigger event and a payout mechanism. And the structure can use a single trigger, usually called parametric insurance, or multiple trigger. If the index crosses a certain predefined threshold, all the policyholders in the affected area receive a payout, but this payout is regardless of their individual losses. The benefits of this approach are being independent of underlying physical assets, because index-based insurance can provide cover for intangible assets and financial losses that are otherwise uninsured, and the loss settlement is transparent, and the payouts are fast based on a measurable index, giving the insured access to liquidity when it's most needed and helping businesses to get back on their feet quickly. But this contract introduces a basis risk because of the payment may not match the real financial losses. But this next slide focus on this basis risk. Basis risk is a scenario when the insurance policy triggers based on the index to pay a claim, and yet the actual losses incurred by the insurer's person are different. And we face basis risk in the first scenario, when the adverse event happens, the index triggers and a claim is paid. That's fine. However, if there is a mismatch between the loss and the coverage, then we said that we face a basis risk. In the third scenario, an adverse event happens, the index does not trigger, and a claim is not paid. This scenario is called implies adverse basis risk. And the basis risk mainly arise from product design issues, for instance, insufficient unreliable historic data to test and assess the correction between the trigger and losses, and geographical differences between the insurer's location and the index measurement point, especially when you use data from fixed weather station. If you have any question, write them in the chat. It's now the time for the panel discussion. So back to you, Laura.
Thank you very much, Asma, for that insightful short presentation. All right, so for the remainder of this webinar, we will now have the panel discussion, and I would like to welcome our panelists today, who are Andrea Camargo, the microinsurance programs lead at the World Food Program, Gloria Womitso, head of humanitarian insurance at African Risk Capacity, and also we have two supervisors, Pujan Tunga, director at the Nepal Insurance Authority, and Saiku Kasama from the Central Bank of Gambia. Although Saiku, I think he's having some issues joining, but hopefully he will be here soon. But yeah, without further ado, I would start with the first question, which would be for Pujan. And that is, well, we know that Nepal is now in the drafting process for an index insurance regulation. The question would be, from your perspective as a supervisor, how is the regulatory framework adapting to ensure that index insurance products are context specific and that they can be effectively supervised once they're implemented?
Yes, thank you for the question. We all know that we all are struggling with the adverse effect of climate change that have posed challenge to the insurance industry and the regulators. And so start with, I'd like to highlight upon the context of Nepal. Nepal is a country with very high risks of extreme weather events like glacial melt, erratic rainfall, flash flood, and landslides. And more than 70% of the population relies on agriculture, making them highly susceptible to climate variability. And over 80% of the population is vulnerable to climate-related extreme events and their impacts. So in developing country like Nepal, managing risks through insurance is particularly very difficult due to the country's challenging geography and fact that most low-income households are vulnerable communities being in rural areas. Some places are difficult to reach due to the road conditions and sometimes the road being damaged due to the flood and landslides. So Nepal, I also like to mention that Nepal experienced very unexpected flood in September 2024, which caused over 224 deaths and 158 injuries, with economic loss of 123 million in the most developed country, like capital of Nepal, Kathmandu, and the surrounding districts. So considering the unpredictability of the weather-related disaster and events, the conventional approach to product development may not work in the country like Nepal due to its geographical terrain and high vulnerability of the disaster. So the insurers also face lots of challenge in product development and claim settlement. One type of product may not work in all parts of the country. And the claim assessment is also very challenging due to the geographical location. And sometimes it becomes very hard for the claim assessors or surveyors to reach those sites where the event has occurred for assessing the claim. So index-based insurance or parametric insurance is the best product to manage the risks based on the geographical location, considering the severity and complexity of the weather events in those areas. And parametric insurance provides quick payout when a specific event like flood or earthquake happens. This helps people to recover faster and protect their livelihoods. And it also has a lower cost and can easily reach the remote and unserved area. The role of the regulator always becomes important. So the regulatory frameworks are really essential for implementing insurance, index-based insurance. But to ensure that the framework work, because I must say that the regulatory framework may not always work. There are lots of problems because it is very difficult to implement them. So regulators should be able to set the clear standards for approving the index-based products, including technical validation of the index, pricing, and identifying triggers as well. The framework should be able to address the rules on disclosure, like how products are explained to the consumers, and the grievance handling mechanisms, awareness campaigns, and minimizing basis risks to ensure and also regulator, the guideline or directive should ensure that there is adequate reinsurance placement. To make it more effective in country-specific context, the insurers should be encouraged to bundle the product with other benefits and sometimes pairing the insurance with the basic things like seeds and fertilizers to attract the consumers. There is no regulatory framework in place yet in Nepal, and we are in the process of developing the framework. And some of the insurers are already doing parametric insurance business in different part of Nepal, and those products are actually approved by Nepal Insurance Authority, but we still can't say that the products are very effective and the basis risks are managed effectively, because in some of the products there is very less claim payout ratio. So as a regulator, we are really concerned. That's why we are in the process of developing the regulatory framework. And for that, we have set up a committee inside Nepal Insurance Authority. And that committee is composed of members from the insurance industry, from the micro insurers, and also from the development agencies who are supporting the insurers in parametric insurance. But in our opinion, the regulatory framework should be there, but it should not be too prescriptive. Because if we make it too much rigid, it will discourage innovation and hinder competition among the insurer also. So insurers should be encouraged to innovate, and at the same time, there should be the provision of disclosure on how they are managing the basis risks. The regulator should ensure ongoing monitoring and supervision and track the data to ensure that the policyholders are actually protected and they are actually benefited from parametric insurance. Thank you.
Thank you very much, Poojan, for those insights. And yeah, from the A2ii, big applause for working on the development of this new regulation. Maybe as a follow-up question, you could share with us, assuming this this new regulatory framework will mean that a lot of new products enter the market, how the supervisor is preparing in advance to effectively supervise them.
Yeah, that's a very good question, because it's always challenging for the supervisor, because capacity building of the supervisor is also very, very important. To monitor and supervise the market, the supervisor should be well equipped with knowledge and resources also. Otherwise, we can't do that. And the one thing is that so we should allocate budget for training and capacity building within the regulatory authority also. And apart from that, after the regulation is released, we should be prepared for ongoing supervision and monitoring, so that to ensure that the insurer has effectively implemented those regulations. That's it. And the directive or guideline can, after we release them, they can also help them develop the product that offers benefit for the policyholders, and at the same time, it would be appropriately priced to ensure that the financial health of the insurer should also be preserved. The solvency is also one of the concerns for the regulator. And there is always, I think one point I want to mention, that there is always risk that the trigger point identified for the particular product may not be accurate, and sometimes the policyholder may not get any claim payout at all, even if they face the loss. So this thing should be communicated to the policyholders. So I think we have to keep our eyes on those points also. And one more thing, we are also seeking the feedback and getting the capacity building from the organizations like A2ii in developing these guidelines. We have sent the draft for the feedback. Whenever we prepare such guidelines, we send it to the A2ii for the feedback. I just want to highlight upon the process of developing the directive. So I already mentioned that we have got the committee, and after that committee develop the drafts, we always consult the stakeholders, because the stakeholders are the ones who are actually implementing it. And after getting the feedback from them, we may send it for the feedback with a specialized organization like A2ii. And after that, we have to go through all the approval process. We have to go to our board, and then it will be finally approved. To conclude, I think that the regulator can closely monitor whether the insurers are managing the basis risks properly, and whether the consumers are aware about the feature of the products. Because if the consumers are not aware about the feature of the product, there may be, and they are not able to get the claim in the future, there may be the credibility in insurance sector may be lost. So we should put eye upon those points also. So building capacity, updating regulations, and setting clear standards for data, product design, and consumer protection are the key steps that should be followed by the regulator.
Thank you very much, Poojan, and yeah, great work. Keep it up. Okay, I see already some questions in the chat, so thank you very much. Please keep them coming. We will address them at the end. Now, so my second question is directed to Andrea, and that is, so based on WFP's experience, since they implement index insurance projects in different countries and across regions, I would like to know what are the most common barriers that you have seen for insurance for climate risks, and if you could share maybe one concrete example of how such a challenge can be overcome.
Thank you, Laura, and good morning, good afternoon, everyone. Yeah, maybe let me start with like an important connection between index insurance and food security, and then I will move to the challenges, so it will be very clear how these challenges are relevant for us as WFP. So you know that we are a UN agency or focuses on food security, and we have been working in inclusive insurance and specifically on index insurance since 2011. And the reason why insurance is very critical is because we, as Connor mentioned and Matthias mentioned at the beginning of this call, insurance is critical to manage risk for smallholder farmers, for pastoralists, and for small American entrepreneurs and other communities. And index insurance, as we have been seeing in the last decade or so, it has been like proving as a tool that has been unlocking access to insurance to these communities that are becoming much more exposed to climate risks like drought, flood, etc. What is critical is that smallholder farmers play a critical role in food security. I mean, like you might know that smallholder farmers produce more or less 80% of the food in Asia and Sub-Saharan Africa. But like very paradoxically, they are the ones who suffer the most in terms of food security. So for us, it's really critical to promote access to finance, and within that, insurance, and therefore index insurance as part of our support. Now, in terms of the challenges and having provided that kind of context, I think that we can cluster them in like 3 categories, and I will be giving you a specific example so you can see how we will have addressed them. So in terms of supply, I think that something that is connected already with some questions that have been asked in the chat. One critical aspect is the lack of expertise on these products. I mean, like locally, sometimes in the countries where we work, local insurers might be very unfamiliar about index insurance. And that hinders them really to develop these products. And also that has like a link with the lack of appetite of like entering into these new developments. And they might not see really the business case on these type of products. And that applies not only to index insurance, but I would say in terms of inclusive insurance is quite general. So this issue of the appetite and the expertise is very critical at the supply level. Then we have like at the demand level, some of you already raised this, like affordability is a big issue, not only linked with index insurance, but again, general in terms of inclusive insurance, but also very important and very linked with index insurance is the perception of understanding of these products, because they are very different, as Asma mentioned at the beginning of this call, to the insurance products that we are used to. And imagine, like for us, we are used to indemnity products. So maybe grasping index insurance might be tricky. But imagine like for someone who doesn't even like have like experience with insurance, just understanding this product might be sometimes tricky. However, you will see that sometimes that's not the case. Also, there are another group of challenges more related about policy and regulation that are quite important for the conversation of today. So they relate as well with perception and awareness, because sometimes index insurance is misunderstood. The concept of basis risk as well is sometimes misunderstood, is not addressed sometimes correctly. And also, there are very unrealistic expectations sometimes of what insurance can do and cannot do. So that's also very important. That can be trickled down into regulations that probably are very, I think that Poojan mentioned the word too prescriptive, that ultimately become like a kind of like a limitation for innovation. So the fact in some countries that index insurance is not allowed might be effectively an obstacle. However, this is where I'm coming to the examples on how we have been addressing these challenges. I will give the example of the Gambia, and I hope that our colleague from the Central Bank of Gambia join or not. But for instance, in the Gambia, at the moment, there is not a regulation on index insurance. However, we have been working closely with ARC Limited and with you guys from A2ii to convey the message about like what are the regulatory obstacle like issues that are relevant for the regulator in terms of index insurance, to guide the Central Bank of Gambia in this process of issuing a regulation on index insurance. And even though if that regulation is not present, allowing a pilot in the country. So this pilot actually is on the second year, and it has been like providing like very good results. And it's an example that a way of addressing these challenges is precisely to collaborate very closely with the regulator, with other entities of the government, but also other stakeholders who can like build their local capacities there in order to address these challenges. Another example that I wanted to give, and like that's also connected with one of the questions that were asked in the chat. When there are limited skills at the local level, it's critical to build those skills so they can effectively develop and implement these type of products in the mid and the long term. And when I say they, I'm talking about like local insurers. So for these, it's critical to work with reinsurers, like Gloria is in this call, and I think that she can expand a little bit more. But like one key area that regional reinsurers like ARC Limited and CEPRI does in Africa is precisely to strengthen the capacities of these local players, so they have like the tools to operate, design these products. So as WFP, actually, we kind of like bring this connection and also bring technical service providers to really commit on transferring these capacities and ensure that there will be in the mid and long term like these kind of like knowledge at the country level. So I think that those might be a good examples. Maybe I will finish with another one, connecting with the importance of like the perception and the awareness about what insurance can do and how index insurance could work. In Ethiopia, for instance, is a country where we have been working for the longest as WFP. And at the moment, thanks to the collaboration with the Agricultural Transformation Institute, the Ministry of Agriculture, PULA, it has been possible to integrate insurance within the input voucher systems of the government, because over time, the impact of index insurance has been shown to all these stakeholders. So proving a concept is critical, collaborating with all the partners and building the local capacities and strengthening those capacities is critical in order to address those challenges. And I think that these three examples kind of like illustrate that. So maybe over to you, Laura.
Thank you very much, Andrea, for those examples and for highlighting the relation between insurance and food security. I think that's key to this discussion. Well, going to the next question, I would now go over to Gloria. And Gloria, in your experience, what do you think has been the biggest obstacle for the wider uptake of parametric insurance by the insurance industry, particularly?
Thank you, Laura. I hope everyone can hear me well. First of all, maybe we can do a quick refresh on maybe what ARC is to understand also what could be the barrier for us. So ARC, African Risk Capacity, we are a special agency of the African Union, which has been established to help African governments to improve their capacity to better plan, prepare and respond to extreme weather events and natural disaster, and to assist also food insecurity issue. So we have been split between the ARC agency doing the political management engagement, and ARC Limited, which from which I'm part of, and which is the mutual insurance. At ARC Limited, so we have developed a regional risk pool that provides countries with parametric insurance only. And the goal is really to finance disaster risk management operation combined with contingency planning to determine in advance ex ante how the insurance payout will be used. So over our 11 years of existence, we noticed that an early disbursement of insurance payout and the existence of contingency planning result in more rapid mobilization of intervention. But one of the issue, a major obstacle that we observe from the insurance is the perception of parametric insurance as a niche product, disconnected from a national response framework or core social protection system. In many African countries where we operate, the budget of the government themselves, or even from the local insurance or farmers directly, is extremely limited. So government, if you take the example of government often prioritize immediate needs over risk financing, especially when they believe the donor help will arrive anyway. This makes it really difficult to justify allocating scarce public funds to disaster insurance premiums, especially when payouts are not guaranteed. Moreover, there is also capacity challenges that we have noticed. In many countries, the lack of actuarial skills, data system, or operational infrastructure to understand and manage the parametric coverage effectively. And this is where also our dual identity as development insurer, but also reinsurer will become really valuable. At ARC, we will help different stakeholders from micro, meso, to even macro level to make sure they build a pre-agreed contingency planning where they will not just see the insurance just as a financial instrument, but also part of the disaster risk management strategy. And from a market perspective, the industry must shift from viewing parametric insurance as a product to sell, but start positioning the insurance as a tool to enable early action, protect budget, and also unlock and development co-benefit, especially in contexts where climate risk and humanitarian vulnerability intersect. Last but not least, it has been mentioned many times already earlier, the basis risk that exists is also one of the barriers to take up the insurance policy, because mostly in the traditional indemnity insurance, there is the basis risk, but there is also basis risk in parametric insurance. So while we know that we can never fully eliminate the basis risk, what we are trying to do, and we are trying to communicate to the market and to the different clients we are working with, is that a basis risk can be reduced in parametric insurance by testing against different scenarios based on historical, future, and also using a backup rainfall data set with rigorous customization process, internal quality review, and also having a clear policy document that promotes understanding of insurance contract. So these are the different barriers that we have observed, and also the way we are trying to work to reduce that gap and that barriers. Thank you.
Thank you very much, Gloria, for that answer. I can see that there is quite a bit of activity in the chat, and then I would then ask all of the participants, if you see a question that you would also really like to hear the answer to, feel free to give it a thumbs up and vote for them. But yeah, continuing with the panel, I would now go back to Andrea. And now we're going to touch on the subject, which is, I've also seen it in the questions, of data and technology. And so the question is, how is the WFP leveraging innovative technologies, could be satellite data, mobile platforms, or digital payments, to enhance the delivery and effectiveness of index insurance for vulnerable communities?
Thank you, Laura. Yes, I mean, technology has been critical. I mean, and it's really at the core of index insurance. And for us as WFP, it has been instrumental to advance index insurance in two levels. The first level is in product design. I think that for all of us here, it's very clear that technology really helps to leverage like the value of index insurance. When we have like more advanced in terms of remote sensing, satellite data sets, etc., the reliability of these products increases, and the quality is key for the value that they provide. So working with technical service providers that include like or integrate into their modeling and in the operations of the products, that the cutting edge technology at this level is critical for us. And we are always looking at like ensuring that whatever product is being developed with the support of a technical service provider in a country, we have like a quality assurance review within WFP. So in WFP, we have like teams specifically dedicated on using remote sensing mechanisms to assess weather patterns, specifically to evaluate the impact on food security. So what we are using as WFP is leveraging on all that work that we do at the corporate level and try to use it as well to build this kind of protocol of quality assurance of the products that are being developed in partnership with technical service providers that are already integrating technologies as such in the design of the product. So that's critical in terms of product design. And we see every time new developments. However, I want to flag that not all the developments are acceptable, for instance, for the insurance industry, for their insurance companies, for instance. So sometimes these developments can be helpful, not only for the design of the product itself, but also to monitor its performance. So for instance, we have been exploring the possibility of using like a photo-based index insurance as a way of like assessing the performance of certain products and in certain countries. So we are very open to look at the technology part, not only on the design, but also in the monitoring and the potential improvement of these products. Then the second area that is extremely relevant for us in terms of technology is like all the developments that have been happening in terms of digitalization. Maybe for you, it's important to know, and I wanted to share these figures because I found that they are quite interesting. Well, WFP is one of the largest providers of humanitarian cash-based transfers. And last year, 2024, we disbursed $2.2 billion to 47 million people and across 75 countries. To do that, we have to leverage on like mobile network operators, different technical service providers that have the capillarity to really distribute cash transfers to beneficiaries. So what we do with insurance work is precisely to leverage on those relationships that are built by WFP to distribute cash-based transfer that already are leveraging digitalization. So we can explore how to integrate that in the let's say, processes of like premium collection or payout distribution in the products that we are promoting. However, I would like to highlight that this is not easy. I feel that it's important that we are always aware about the limitations of this. On paper, this sounds amazing, but when we go in country to look at the implementation of this, we see a lot of like obstacles. For instance, like the transaction costs are still very high to use like mobile wallets or different mechanisms in order to support premium collection or payout distribution. And that effectively has a problem for us when we're like assessing the value of the product, because if the product is too expensive and is not sustainable over time, that might not be the best suited solution for these beneficiaries. So we might have to look at different solutions. So that is important. Also, something that is important is that infrastructure, we might imagine like nowadays digitalization has been unlocking access to finance in many countries. But like the truth is that when we go to areas that are very isolated in the countries where we operate, for instance, in Madagascar, these entities are not present. So they are not present because there are infrastructural problems that go really beyond our control. So that's important, because even though those elements have been like critical for to unlock these fast payout distribution and like the better perception of index insurance or insurance in general by beneficiaries, it has still like a lot of complexities in terms of the implementation. Over to you.
Thanks, Andrea, for that answer. And yes, definitely, it is a challenge, but also a huge opportunity. So yeah, hopefully it will evolve even more. Now, staying in the same topic, Gloria, I would go over to you to ask, in your experience, how the supervisor can support insurers such as yourself to foster innovation. Yes,
yes,
and then
thank you.
yeah, okay, go ahead. Sorry.
No, you can continue. Sorry, I think I cut you.
No, it's okay. It's just like a question that is divided into. I will ask the second one later. It's fine.
Okay. So that's a crucial questions coming from ARC limited African risk capacity. We are operating from Bermuda, but then we are subjected normally to one of the most advanced regulatory regime in global insurance. But as part of our African Union mandate, we work on the African continent. We work with African countries where regulatory ecosystem are still evolving, and it's so different from one country to another. For example, the regulatory in place won't be the same if you operate in West and Central Africa. They have called CIMA together for many countries being working together, or if you work in Eastern and Southern Africa, where you will have regulatory in place for each of the countries. What can facilitate the collaboration is a regulatory environment that is context aware, risk informed, and open to innovation. In emerging market and development economics, supervisor can support innovation. In such setting requires more than just the project approval, but where the supervisor become really an enabler of the system building. What does this mean in practice? Encouraging the collaboration between insurers, government, DRM agencies, and development partners, and also ensuring that synergy exists between national resilience policies and the insurance regulatory framework. Also, the supervisor can facilitate the access to public infrastructure like national meteorological data, but for that regulators, that means also that the regulators should engage early in the process and not only at the finalization when the contract will be signed. It's really important that the regulator being engaged in project development, being invited to attend the technical customization workshop, for example, where they can gain insight into how drought or cyclone models or flood are built, how satellite data is validated, and how payout will tie into government or the smallholder farmers into the response plan. And this can foster and create more transparency and mutual confidence between the regulator, the supervisor, and the insurance industry. Thank you.
Thanks, Gloria. And then a follow-up question would be, so given that index insurance, as we mentioned, is so technology heavy, what sources can you utilize that are more accessible to EMDE jurisdictions in your experience?
Yes, thank you. So in terms of data accessible in the countries we are working on jurisdiction, for example, at ARC for African continent, to develop the parametric insurance project, we will use, we use a satellite data set, and we work with different satellite data set provider, such as NOAA, where we will receive ARC2 data set, RFE2 data set, CHIPS rainfall dataset, MODIS and DVR for vegetation, or global cyclone tracking dataset to define the exposure and risk of each of our clients, then having the support actually of the jurisdiction in place to endorse the use of alternative data source will be helpful. I think the supervisor can also, in terms of data, can champion the creation of both ground level infrastructure, like having more weather station, distribution network, local claim protocol, and space level capabilities, where it's not only having the access the satellite dataset through external providers, specific satellite dataset provider, but where we can really access through ground station data. I hope it's clear.
Yes, thank you very much, Gloria, for your answers. Okay, so going on with the panel discussion, sorry. The next question would be for Pooja, going back to the supervisors. So in the past, NIA mentioned that the insurance industry was facing some challenges in recollecting the necessary data for catastrophe modeling. Could you maybe share what these challenges were and how if there has been any work on improving this issue, as well as which stakeholders have been involved?
Yes, the data is always the problem. However, the companies, for parametric insurance, the companies are using the national meteorological data published by Department of Hydrology and Meteorology of Nepal. And also National Disaster Risk Reduction Authority has also developed a dashboard in their website which provides the updated disaster-related data. However, the lack of adequate weather stations still remains the significant issue. While weather stations do exist in many areas, their number are still insufficient. For example, Nepal's highly diverse geography demands a denser network of the stations to ensure the adequate and accurate and localized weather data. The trigger points often fail to reflect the localized realities, even within the 2 kilometers facilities. For instance, in villages located just 4 to 5 kilometers apart, or even within the same village, there can be significant difference in how the flood or other event affect them. One section of the village may experience flooding and at a certain water level, while the other still remains untouched. So for what we have done, we have collaborated with World Bank to develop the world flood model, and the flood model is in place. It is not in our ownership yet, but the flood model has been developed by using the historical data, and now we are in the process of going towards risk-informed pricing by using that flood model. That is one development. And another development is our new act, Insurance Act 2022, has mandated mandated the Insurance Information Bureau. So Nepal Insurance Authority is working towards drafting the guideline or directive for the Insurance Information Bureau, and after the bureau is formed, the access to data will be more easier for the insurance industry. So so in this so Nepal Insurance Authority is, in this regard, Nepal Insurance Authority is planning to set up Insurance Information Bureau, and at the same time the insurers are collaborating with the government agencies for the data. So that is the development in there.
Thank you very much, Pooja, for your answers. Okay, then I would go on to the last question, which is more of a general question for all of the speakers today, and you can intervene as you wish. And that would be, from your perspective, what is you think the most critical barrier for improving the access to index insurance for vulnerable communities, and what specific actions would you take to enhance this access? This could be whether through regulation, innovation, community engagement. What is, in your opinion, the one thing that maybe we should be prioritizing right now?
I can take the first response. So I think that there, I would share two. One, I think that is the expectations that are on index insurance. I think the index insurance is a modality that there are other instruments that are critical to build climate resilience of smallholder farmers. So it's very important to communicate this very clearly to stakeholders. And when I'm talking about stakeholders, I'm talking about government, I'm talking about like beneficiaries, I'm talking about like the insurance industry. If we think that index insurance is the panacea and is going to solve all the problems, then the expectations are very high. And then there will be a lot of like complexities in terms of its implementation. And maybe a solution around that, it's like it goes both ways. One would be like effectively piloting, showcasing what index insurance is capable of, also what indemnity insurance could do, because I think that it's important to highlight that indemnity insurance still has a role to play in agricultural insurance. And I think that there's a question around this, and technology can play an important role as well to improve the reliability and like to strengthen indemnity products. And also something that is very important is to integrate insurance into a package of resilience. I think that we cannot expect that index insurance is going to manage all the risk and like focus on like events that are like less severe and more frequent. I mean, we need to position index insurance where it should be, and we have to integrate it with other financial instruments that could be at the micro, meso, and macro level. So that I think that is important. I would like to maybe add something as well that comes along with the comment of like Craig made about like the perfection. I think that actually is becoming an obstacle. I think that we're looking at perfection in terms of product design so much up to the point that we end up like designing products that are only feasible for a small community for a certain crop. So we need to really think about what is the problem that we want to solve here. And I think that what we are currently doing in WFP is trying to develop crop agnostic products, products that actually are more aligned with providing emergency cash. So beneficiaries can have like this kind of support. And this is like collaboration with the private sector is very important. So for instance, we're developing forecast index insurance products. So we can like promote the adoption of insurance can like mobilize resources for anticipatory action. So I think that those might be for me like these biggest obstacles and maybe some actions to address that. Over to you.
Thank you very much, Andrea. And yes, I agree in the highlighting of Craig's comments. Yeah, perfectionism is also well, I would say. So Gloria or Pujan, do you also have a comment on this? Whoever.
Yes, maybe I can start and then Pujan can come. So from our side, the most critical barrier to access is the disconnection between insurance mechanism and the way vulnerable communities engage with risk, agricultural and finance. Many smallholders, farmers, especially in Africa, are not part of cooperatives, don't have formal records. Of course, Andrea mentioned we are doing a lot of work now with WFP and other also stakeholders where they can be the intermediary to help to address this gap. But there are still things to work to. It's still a work in progress, and so then they rely on informal market. This makes it incredibly difficult to reach them at scale with structured projects like index insurance. And what we have seen at ARC, especially through, I already mentioned the work that we're doing with WFP and others, but even through the Replica, because there was one question about Replica, which is a program that we have developed for humanitarian agencies, NGOs, UN nation agencies to come and complement the effort that the different governments are doing by supporting the population. So through the Replica policies, we also noticed that working with different actors, such as humanitarian, they can serve as platform for coordination. They can therefore support national agricultural initiative by tying coverage to public program like input subsidies or seed distribution. They can also encourage the use of digital solution such as mobile registration or SMS-based alert, which improve efficiency and the way we can reach to those smallholder farmers and really build the trust through community aligned delivery models. So ultimately, improving access requires us to design for the real world of vulnerable people, where literally there is trust which is still fragile, and resilience is a daily act. So when we meet people where they are, insurance becomes not just accessible, but transformative. So this is where we are trying to go, and yeah, we hope that this will be possible in the next coming years.
So,
Go ahead, yeah.
so in my view, the most critical barrier is in case of Nepal is lack of suitable product, suitable customer-centric product, and other factors may be accessibility, affordability, and awareness. So the index-based insurance may address the need of the vulnerable committee, but they don't have or have limited access to insurance services. And not only product, but distribution is also another problem. And so the insurance companies, they should organize the awareness campaigns, focus group discussions, and develop the consumer-centric product. And at the same time, they should also focus on partnering with the local government, provincial government, cooperatives, and local groups to promote insurance services. And as I already told earlier, the product innovation and adoption of technology is also very, very important. And sometimes collaboration with the organizations which are working with the communities who have already penetration or access to those community or can also be helpful. And as a regulator, I think we should facilitate the insurers by developing the regulation and also promote the enabling environment to the insurers. So I think regulators should be enablers. Yes, and apart from that, awareness campaigns and focus group discussions can be one of the solutions to solve these problems. Thank you.
All right. Well, thank you very much to all of the panelists for answering all the questions. We don't have much time, but I would like to take maybe one or two questions from the chat, although I see you have already been answering. Thank you for that. Also, just a reminder, if any of the participants want to speak up, feel free to raise your hand and we will unblock your microphone. Yeah, maybe I would first take the question from Ian that is related to the sustainability, but also the resolving the issue of dependency on external consultants and preventing the faulty index designs that often propose to countries that lack proper understanding and technical skills. That's how he phrased it. I don't know if someone in the panel would like to take this question. I mean, well, maybe just a short comment that one of the solutions that I can think of is, of course, capacity building in the country for both the supervisor and the industry. But any of the panelists?
Yeah, maybe just two things, and I'm sure that Gloria will complement on that. I think that one key area is that organizations like WFP, we bring capacity to the local market, so these capacities are strengthened. So it's very important that organizations like us, we work very closely with the technical service providers, so they really make an effort to transfer that knowledge, because effectively there might be a conflict of interest of technical service providers not willing to transfer that knowledge. So ultimately there is the dependency. So I think that the role that we play in creating this kind of environment of like capacity strengthening is key. And I think that my second point comes with the reinsurance companies, because reinsurance companies play a critical role in building that capacity. And this issue of conflict of interest is not really there. So the work that ARC Limited and like CEPRI do in that respect of building the capacities of these local players is critical to address that dependency.
I also want to make some point in this question. So I think this question is very, very relevant also in case of Nepal. So I think one solution can be for capacity building, can be offering the module-based training for the regulators and the industry, and also certification training. And apart from that, the experience sharing with other regulators and adopting international best practices through experience sharing can also be one of the solutions.
And Sim, maybe if I can really, is just to complement what Andrea and Pujan have already mentioned. But I think from our side, we really try to organize frequently training for the different stakeholders we are working with, because we notice, and I think I mentioned it in part of the responses that I provided to some of the questions, that this is still important, and it will be an enabler to have because this comes as a barrier, the fact that they don't understand very well what the parametric insurance is and how even we can design an index. So from ARC Limited, for example, we will have different teams that will go first, maybe a product design team to do the customization, really train. When we work with the government, we will they will form what we call a technical working group. So we will have experts from different departments. That could be somebody from the Meteo, somebody who really doesn't understand nothing to the insurance, but maybe is part of vulnerability department where they can provide information on people. So we are trying to put them together, and then we will train them so that we just strengthen the capacity, the understanding, and build also the trust. And this is something that we also want to do more with regulators, because I say this will be also important if we really want the regulator and supervisor, to support us at the different stages. Thank you.
Thank you very much for your answers. We are running out of time, but I would ask you if you have any. I just saw the question now about the scientific evidence that, well, without questioning the use of insurance, if we have scientific evidence that it leads to adaptation and resilience building action of farmers in the long term versus keeping them in unsustainable modes of production, I would think there's probably quite a few publications on this. So if you have any recommendations, feel free to put them in the links in the chat. But yeah, unfortunately, we only have 1 minute left. But if your answer has not been, if your question has not been answered, please feel free to send us an email, and we will do the best to respond to you one-on-one. But now, before we close the call, first of all, I would like to give a big thank you to our panelists for sharing their insights today. I hope that this